Most traders obsess over the entry, where to get in, what price. But the exit decides whether the trade actually adds to your account. Entries are highlighted everywhere, exits get less attention. Every ArcAlpha alert ships with chart reference levels for the exit side, alongside the entry. Today, what those levels are, how the exit logic differs across the three persona cadences, and a workflow that works without watching every bar. Open any alert in your dashboard and click into the chart reference panel. First level, the anchor, the chart pivot the setup is measured from. Second, the release point, where the price action shows the setup is in motion. Third, the measured move references, one or two forward levels at 1 or 2 times the anchor distance. And alongside those, the suggested stop level, the price where the setup is no longer a valid setup. Together, anchor, release, references, stop, that is the complete chart reference picture for the trade. Start with the stop. The platform suggests a stop level just past a relevant chart pivot, the level where, if breached, the original idea is invalidated. You set this in your broker as part of your bracket order. From this video forward, no stop is mental. Every stop is a real order living in your broker. The pivot the platform reads varies by cadence. Weekly pivots for position alerts, daily pivots for swing alerts, intraday sweep extremes for day trade alerts. Same idea, let the chart decide where the line goes, applied at the time frame of the cadence. Now the upside side. Every alert has at least one measured move reference, a forward level at 1 times the anchored release distance, projected past the release point. Swing cadence alerts get a second reference at 2 times the same distance. On swing alerts, the first reference is a checkpoint. Many users take partial profits there and let the rest run toward the second. Some alerts also surface a trail activation point, the price at which a trailing stop becomes relevant. Once price reaches that activation point, you can move your stop to follow price up, locking in profit while the position runs. The trail is your action in your broker, not the platform's. The platform points at the activation level. You decide whether and how to use it. The exit logic differs by cadence. Position alerts have one measured move reference. The exit is a single limit order at that reference, sitting in your broker for weeks. You check once a week to verify the trade is still on plan. The exit either fills or it does not. Swing alerts have 2 references. The first is a partial exit checkpoint. The second is the full reference. You can place both as a scaled bracket, a partial limit at the first reference, the rest sitting at the second. Some swing users move the stop up after the first reference fills. Day trade alerts have a single reference at 1.5 times the anchor distance. The trail activation point sits at the halfway point, the place where the trail becomes worth managing. The day trade exit is the most active of the 3, speed matters. The position is meant to close inside the session. Same alert structure, 3 different exit rhythms, each tuned to its cadence. Practical day trade exit workflow. When the bracket is filled, set a single price alert in your broker at the trail activation level. When that alert fires, move your stop up to lock in the partial gain. That is the only adjustment. From there, let the trade either reach its reference or trigger the moved stop. Either outcome is a closed trade. 1 price alert, 1 stop adjustment, no watching every bar. The discipline is to make exactly that one adjustment and nothing else. A few execution patterns to avoid. Do not move the stop further from the entry once the trade is on. Widening a stop mid-trade is canceling your insurance the day of the accident. Do not try to optimize past what the alert provides. Adding extra exit conditions or skipping the suggested reference because you think you can extract more usually does the opposite. Do not run a position with no stop in the broker. The mental stop fails every time. Do not re-enter the same position after a stopped-out trade just because the alert is still on the screen. Wait for the platform to surface a new setup. So every alert ships with the entry side and the exit side mapped. Anchor, release, references, stop, optional trail activation point. The exit logic adapts to the cadence. Single reference for position, 2 reference scale out for swing, single reference plus trail for day trade. In the next video, we put it all together, end to end, from an alert appearing on the dashboard to the trade closed in your broker. This is educational content and is not a recommendation to buy or sell any security.